Well, let's now get set for our discussion segment. Mujib Dada-Kadri, a lawyer in the capital market, is joining us right now. So let's have Mujib. Mr. Mujib, a good day to have you on the show, sir.
Good morning, sir. Nice to have you.
All right, so let's get set and dive into our discussion segment. First and foremost, what is your reaction to this capital gain tax that is coming? Although everybody is raising up their own opinion, but as a lawyer who understands economy policy law, take us through this, sir.
Yeah, thanks so much. I'm happy to be here again. You see, the tax wave, the tax reform wave, is quite ambitious. But, you know, we must be very careful with such ambitions. We must be very careful with such ambitions. The capital gain tax, well, has been there for a while. It used to be 10%. It's at 2023, 24. Now, the ambitious tax reform is targeting 30%. That's, I'm sorry to say, it's quite outrageous. Because, you see, capital gain tax has to do with simply taxing gains, you know, gains of appreciable capital assets. You know. So, taxing bonds, securities, and real estate, you know, gains and what have you. That's what it's all about, generally. But the capital market in Nigeria is just growing. To me, it's silently growing. And I don't see reasons why we should be extremely targeting such a sector now. For example, Nigeria's capital market appreciated as, should I say, is one of the fastest rising capital markets for 2025. The ROI rated, or let me say, the ROI income was rated around 39% or 40% increment. I mean, the average ROI for the capital market for 2025 has been around 39%, one of the most impressive for 2025 globally, actually. Quite impressive. But we don't used to see such kind of improvement until recently. So targeting such industry and the fast rising real estate sector and other sectors with 30% capital gains tax is quite outrageous to me. It's quite outrageous.
Right.
I think we should give this sector some time to grow further, attract more capital, attract more players before we slash, before we choke that sector with 30% capital gains tax.
I really like your submission in that regard, but let's take a view from other developed economies or developed or emerging economies like ours. In 2001, South Africa intended to bring this kind of policy in, but they reconsider it. Similarly, in 2018, India also tried such, but they also reconsider it and take a view of other aspects. But in your own view, why do you think the current government take such decision at this point in time? Even though it has been acknowledged that the Nigerian stock market is now gaining momentum, it's now becoming a high among stock markets in Africa. Well, let's have your view on that, sir.
Yeah, thank you. I think the reason is, I wouldn't know their mindset, I wouldn't know their intention, but from what I'm seeing, I think there are two reasons for that. One, first, going by the company income tax, they exempted small companies with less than 50 million turnover from company income tax, and some exemptions were introduced. So I think it's like robbing Peter to pay Paul. So since they know they will be losing some money from some parts of the company income tax, they feel they can make how will I say it? Find a way out of it. Find another alternative from such losses through capital gains, through capital gain tax. That's my own perspective. When you are seeing that people making 50 million, less than 50 million turnover are not liable to pay company income tax. More than 50% of Nigerian businesses are not making up to that amount, above that amount yearly. So to take care of that, in my own perspective, they had to consider or bring in Capital Gains Act 30% to sort that out. And secondly, I think they are also observing the appreciable improvement in real estate sector, in capital markets. But we have to be very careful with the magic. I call it magic. With the magic we are seeing in the capital markets.
Exactly.
Because it's not. We still have to. For example, in South Africa, the South Africa's capital market is valued to be over $10 billion.
Exactly.
In Nigeria, we're still struggling to even get more players into the capital market. So what is happening now, what we're enjoying in the capital market now is triggering the magic I mentioned in quote, is because of the high interest rates. The high interest rates to be introduced to deal with the inflation, which is to me a wrong remedy for the inflation. But we're having high interest rates, juicy high interest rates, and that is opening the capital market. People are getting more attracted in the capital market, and the economy is getting more financialized. So when the economy is getting more financialized, things like this will happen in the capital market. But that doesn't mean we are growing the capital market organically. We have to be very careful in discouraging people from that capital market. For example, if I'm making 40% or 50% annual income from capital market, capital market investment, and I'm being taxed almost 30% or something around that, will I be comfortable, sustaining such investments in the capital market? So I think that's my view. Yeah.
Interesting. But there's a cover to that law I want our viewers to also understand. And according to Mr. Taiwo Udile, which you also know very well, who happened to be the chairman of the Presidential Committee on Fiscal Policy and Tax Reform in Nigeria, said something about this law. He said the disposable shares would attract some of these taxes. And for many of the players on the Nigerian stock market, they are yet to be comfortable. They are not comfortable, I would say. For them, there is fear. The potential fear for them is that this will definitely drive out investors who come to the capital market, buy shares, do some trading, and after some time you want to sell it, you now hear that there's a law that if once you sell, they will hammer you with some tax and you pay for it. From you, Mr. Mujib, who happen to be, you are a lawyer and you understand some of these, technicality around this particular tax law. What do you have to say about it? Because investors we are calling, investors will come, they will do their business, they want to go back, and we'll hammer them with one kind of law like that. And, what do you make of it, sir?
Sincerely, like I said, I feel it's too early. Like I said, it's too early to start targeting the capital market. It's too early. But we have to be very careful. The capital gain tax is not just about the capital market. Yeah, it's also has to do with real estate and other sectors. With gains, actually, capital gains. So it's actually highly asset-based tax. So beyond the capital market, we are also seeing tendencies of discouraging more capital in fast emerging sectors. And that's my biggest fear. So we should allow sectors as a growing economy that is still battling and yearning for more investment, more capital. We have to be very careful, lashing these sectors with too much of taxes. Let's take it bit by bit. Let's take it fairly. Look at UAE, countries like Oman are attracting investors from Europe with flexible and favorable, should I say, modest taxes. So we have competitors competing for global capital. So we have to be very careful not to lose out on that game. Modest taxes are fair, but has 30% on capital gains, quite outrageous.
Interesting. And let me ask you this question, Mr. Mujib. There are people who also view these capital gains, as double taxation. Are you in that school of thought? Because as he earlier explained, that because of the company income tax that have been reduced, this give opportunity for government to take in this illustrative move whereby you rob Peter to pay Paul. But people are now saying that that's not the only issue. It is like a double taxation move. But what's your take on that, sir?
Well, to be frank, I wouldn't know if I can call it. As I said, I don't think I can call it double taxation. I don't think I can call it double taxation because we still have. You see, this is where it can become double taxation. When states get serious with property taxes, property taxes are under the purview of state governments. So when states get serious with property taxes and land dues and what have you, we now also battle with capital gains tax. Then we can say it seems like a double taxation. But for now, most states are not even interested in property taxes. They're not interested in it, and they are not even been serious with registration of titles. Formalizing titles. A lot of titles, land titles, property titles in Nigeria. Land and property titles in Nigeria are not registered. So that is even another angle to the issue of capital gains. So as far as I'm concerned, I don't see tendencies of double taxation yet. What I'm just seeing is outrageous taxation, not yet double. The company income tax is different, capital gains is different, petroleum profit tax different, land dues and what have you are also different. So stamp duties, quite different. Except people are just not comfortable with the fact that profits, incomes of companies are being outrageously targeted. They are having too much of tax burdens. As a company, you are being dragged to pay almost 6 to 7 taxes on your income. So some people are not comfortable with that. And I also agree with them that as an emerging economy, our tax ambition should be modest and flexible, so that we allow more emerging sectors to blossom and will compete favorably with global capital.
Exactly. Now, Mr. Mujib, having talked about modest, having talked about comfort, for the government, this tax law is to promote growth. This tax law is to bring about fairness, and this tax law is to ensure we have an even development coming from government intervention in the development program as a way of collecting tax here and there. But on the part of Nigerians, a lot of fear have been expressed. I'm asking this question on the background of some of the discussion I've had within the last 3 days talking about the new tax law. But for you, who is a lawyer, can you help us to shed light on the essence of taxation in any economy? Because 2 days back, there was a serious debate that I was engaged on this same issue of tax. But most Nigerians are not comfortable with the new tax law. But you as a lawyer, you can help us to break this down for the advocacy and understanding of Nigerians that this tax law that is coming is not more of a punishment, but it's a way to get development being carried out. But let's have your view and your advocacy on this new tax law, sir.
Yeah, thank you. It's from two dimensions, actually. There's a legal dimension to it. There's a development economics dimension to it. Legally speaking, taxes are meant to exist for societal development, for deterrence, for fines, and what have you, and also for economic policies. That's the dimension of law. But from the dimension of development economics, it's quite deeper. Taxes are sources of revenues to keep economy running, to sustain economy. So generally, or basically, fundamentally, tax is not evil. Tax is not evil. The only challenge is when people are unfairly taxed and where there's lack of transparency on use of taxes, on tax investment, or where people don't get either immediate or long-term benefit from tax contributions. That is where we have issues. So the problem is that when people are unfairly taxed, extremely taxed, and there's no accountability with their tax contributions, with their tax payments, then we have issues with the tax policies. So, a good example, for example, now, most Nigerians are earning below decent wages. Now, we're having tax reforms now saying they will pay personal income tax. People in white collar industry wouldn't be, or blue collar industry wouldn't be the only ones that will pay taxes. If you are earning, you have to pay. Now, that means people earning 200,000 monthly, 300,000 monthly, 150,000 monthly will now pay more than 50% of their income for taxes. The question is, will this help purchasing power, their spending power in the long run or not? Another question is, what are the benefits, either immediate, mid-term, or long-term benefits they will gain from these taxes? So basically, generally, tax payment is not evil. Tax is not evil. When we grow in population, we need taxes. Even if we have a lot of resources, natural resources, we are resource rich like the Arabs. We are also resource rich in Nigeria. But considering the largest of our population, we still need tax revenues to balance our income and keep sustaining the economy sustainably. Because anything can happen to resource exports, But taxes are necessary to keep the economy running. And that's why countries like Saudi Arabia, UAE are also, strategically and softly, slowly coming into more tax-based economy, unlike against the totally resource-based economy, or natural resource-based economy. So that's just the point.
Exactly. Interesting. But before I let you go, Mr. Mujib, let's quickly take on these two-edged sword question. One, if you are to advise the federal government right now on how to ensure that this tax new law is implemented, progressively as well as developmentally, what will you say to them?
Well, if I'm to advise them, first I will tell them to consider the economic trend before implementing and executing these tax reforms. Before pushing these tax waves, we have to consider the economic trend. What is the economic growth rate? What is the purchasing power growth rate? What is the inflation trend? This must be considered before we increase taxes, or before we introduce more taxes, or before we enforce taxes drastically. That is one. On the other hand, what are the benefits for the people paying these taxes? If you want to make people comply with tax laws voluntary, there should be reasonable benefits for these tax payments. What are the benefits? We can see the tax reforms, we can see the tax laws. Very nice, tax ambitions, but we're not seeing benefits. I mean, immediate benefits, not even long-term benefits. Long-term benefits are even debatable. People ask you, we can't get good power supply, we can't get good roads. These are even long-term benefits. We're talking of immediate benefits. What are even the immediate benefits? You say, okay, if I pay taxes, if I pay my income taxes well, if I pay my capital gains taxes well, what are my rewards? What will I gain? Immediately. I mean, not immediately. I mean, in the short-term basis, annually, this is what I will gain. So I'm encouraging the federal government to also make sure that these taxes are incentivized. These tax compliance are incentivized, reward-based. If I'm paying my income taxes annually and adequately, I should be entitled to maybe low interest rates from federal government. I should be entitled to federal government grants. I should be entitled to some scholarships for my children. I'm talking of strategic tax rewards, tax benefits. Thank you so much.
All right. Thank you so much, Mr. Mujib Dada-Kadri. Your insightful and resourceful submission on this topic is quite, I would say, germane. I'll tell you authoritatively from my humble self. In the last 1 week, I've been bombarded with questions on regard to the tax law. And even one of the government-owned institutions, media institutions, have to reach out and begin to seek for opinion from economists like my humble self and others. So it's an opportunity for us to begin to create advocacy in this regard. Even on your own humble social media handle, I've read some of the things that you have written concerning this tax law of the federal government. Although it's ambitious, although it's not evil, but the way to go is that it must be incentivized, just like you have suggested to the government going forward. Mr. Mujib, thank you so much for coming on the show today.
Thanks so much.
Let me also tell you, this won't be the last time we'll be talking about this tax law, because it's an evolving issue that by 1st of January 2026, we need to have a direction on it. And so people like you will be called upon on the Market Report show to come and give your own analysis on it. So, but thank you so much for coming on the show today, sir.
Thanks so much, sir. I'll be glad. Thanks so much.
All right. So enjoy the rest of your day over there in Abuja. Now I'm speaking with Mr. Mujib Dada-Kadri, who happen to be a lawyer and an economist. Mr. Dada is one of those lawyers that are not just going to court, but they're also doing aspect of the economy law, understanding the law that affects the economy. And that one of such law is the tax law that President Bola Ahmed Tinubu has brought. And for Mr. Dada, tax is not evil. They have perpetual fear around our communities, around our society today in Nigeria because of this new tax law that's coming up by January 1st, 2026. But we need to educate our people on how this law will be implemented by the federal government. And one of such is that before that law will take effect on the 1st of January 2026, the Minister of Finance will need to draw out and send out a gazette. And that gazette is to show that the law has been in effect or the law will start. But if it doesn't do that by 1st of January, there is no way such law will come to pass in Nigeria. So let's prepare for our second segment of discussion right now, as we are joined by Mr. Adedokun Adesanya, who will be joining us shortly. But let's go for this break so that we can bring it in. Let's go for this short break.